It was a down day on the stock market. We had a pretty good sell off, really created by ASML, which is a big semiconductor equipment manufacturer. They manufacture the big machines that semiconductor companies use to then produce semiconductors. And that particular company really drove down technology as a sector. And I'll get into ASML, kind of look at it a little closer. And I recorded a short earlier today, just sharing more thoughts on ASML and the impact that ASML had on the semiconductor space. But if you look at all the different sectors that traded today, the leading sector was real estate. Real estate went up. I think part of it was the to move to safety. Moving investors wanted to move to real estate, or they wanted to move to consumer staples, something that was safer other than technology utilities. Now, it's a one-day move, but is it the beginning of something that's going to be more impactful or more significant? Are we going to have more sell-offs? And we'll see. We'll see how the earnings go tomorrow. We'll take a look at the calendar in a minute and see what's coming up tomorrow and Thursday and Friday and see how the week's setting up. For sure, I see that the TSM earnings, which is going to be on the 17th, that's going to be a huge earnings call because you had ASML saying that, the demand for their equipment isn't very high. Their bookings were not very good, which is contrary to the whole story that, hey, semiconductors are enjoying this huge peak in demand. Well, if that's the case, why is ASML struggling to sell their equipment? It should be that they can't ship stuff fast enough. They can't keep up with the orders. So that's interesting. If they're saying that, and then we have TSM show up with maybe a weaker than expected earnings, that's going to continue on the sell-off, and it'll be quite ugly. But we'll see. Time will tell. We'll see where the market goes. So I've had a couple of stocks in mind that I'm going to cover. One of them was a member request. We're going to look at AVB, but the others are going to be a part of the announcements today. We have companies that announced today include, we went over all these that announced before the market opened this morning, so I don't have to cover that ground. But United Airlines announced after the close, and let's see what they had to say. And let's see how the stock is behaving. This is an airline. We can talk about that. Omnicom Group. I'm not familiar with that stock. Let's take a look at that stock. JB Hunt is an industrial logistics company. I like looking at those companies because they tell me a little bit about the economy. So I'd like to see how JB Hunt is doing after the market closed. Well, take a look at Interactive Brokers. And Walgreens had a stupendous day today. They announced before the market opened, and their stock was up like 15%. So there was some good news. That company has been burdened with a lot of bad news. So it's nice that they catch a break and have a very good day. So we'll see. We'll see how they do going forward. All right. So to lead things off, let's take a look at United because I am familiar with this stock. I've been an investor in United. And this stock has been somewhat of a stock that has great fundamentals, but the market just doesn't like airlines. This is the 5-year chart. You can see that after the pandemic, obviously before the pandemic, they were selling at $91, $93 a share. Then they sold off because nobody wanted to travel and, all the social distancing and so forth, who wanted to be stuck in an airplane when COVID was going around. Totally understand. The government helped them from, going bankrupt. And the company proceeded to just kind of bounce back. And I thought that, right around the 22 timeframe, it would be a good idea to invest in United because I thought travel was going to go off the charts, and it did. It really did. But the stock's still trading under the stock price before the pandemic. Even though their revenues are higher, it's still trading underneath that. In after hours trading, even though they had a good earnings where they beat revenue, they beat on profit, they're going to buy back a ton of shares. Look at their PE, 7.26. These are current year PE, 2025, 5.72. Those are incredible numbers. And these guys have the fundamentals behind that. This is the quarter that just closed. And if we look at the trailing 12 months, you see their revenue in 2019, they were a $40 billion company. Now they're 52.5 billion, much larger, but their valuation's much smaller. It's kind of broken. And their profitability is there. Net income is there. Look at their profitability. It's about the same, a little bit lower than 2019, but it's right there. You had the good news of oil prices dropping substantially. We were trading oil at like mid $70 per barrel, and now it's down to $70 a barrel. So that really helps an airline. That was good news, combined with a good earnings report where they did well on the top line, did well on the bottom line, and they produced free cash flow. So this company is one where the fundamentals may be there. The company may be doing well from a fundamental perspective, but the market just doesn't like airlines. It sells them off, and it's going to be hard to get this stock to move. Some analysts believe it's a $98 stock. It's on average is a $74 stock that it's discounted. And I agree with all those things. Now, I owned the stock for about 2 years, got out of the stock because it just didn't move. It didn't go up. I think the company is being run really well. I could just continue to say good things about United, but the reality is that some industries just don't get valued very high, and airlines is one of them. Legacy automotive is another. Retail, not a lot of investors in retail, unless you're one of the behemoths like Walmart, Home Depot. Retail is really tough. Airlines are really tough. You have to buy expensive aircraft, operate them, buy expensive fuel, employ a lot of people, deal with a lot of problems like weather and all that good stuff. So it's United announced. It's a $21 billion market cap on a revenue amount of $55 billion. And as expected, the market is not buying. It's unfortunate. I think United's doing a great job. Great job, United employees. Great job. Their CEO is stupendous. Really, really good leader. And I just think the world of him. But the market just is not buying his company stock. So that is United. The other stock that I wanted to look at early is Avalon Bay Communities. This is a real estate investment trust. Let's take a look at the profile just to reacquaint myself. So this is a real estate investment trust, a REIT for residential rentals. So somebody looking to rent a place to live, they may be renting from Avalon Bay Communities. They are a company that's been around for a little while, since 1978, headquartered in Arlington, Virginia. They are going to announce on November 4th, and they are a $32.4 billion market cap company. Pay a nice dividend of 3%. We look at their charts. For the 1 year, they're doing really well at 26.77. You add this dividend rate, you're close to 30% return in 1 year. For the 5 year, they've been up and down, up and down. And I know that residential real estate REITs, I don't know why they'd be selling off during this period, but they did. And this to me looks a little discounted because residential real estate is just renting at much higher rates. So I would think these guys are making more revenue, more profit, and have higher funds from operations to pay dividends. We'll take a look at their financials in a moment, but the 5 year kind of looks a little bit surprising. It looks like an opportunity. The 1 year looks excellent. They've been doing a nice job. So, yep, they do apartment buildings. So that makes sense. And apartment buildings are really desirable right now as investments. There is a housing shortage. And I know that I'm in California, rents are going up, but I think everywhere rents are going up. It's just a little more expensive to live somewhere nowadays. When we look at this company, total revenue has expanded from 2.3 billion all the way up to 2.861. It's been nice steady growth. I like that. Nice steady growth out of a real estate investment trust. Real estate investment trusts are not going to be like, Meta that are going to grow very dynamically, or, Nvidia. It's going to be a steady growth. Usually real estate investment trusts are good as an income producing investment, something that is going to produce that dividend and be stable. And with lower interest rates, that's going to help Avalon Bay grow, because maybe their next deal, when they do the financing will be less expensive. So I think that this is probably going to see good long-term growth, or this REIT is going to see good long-term growth because of the lower interest rates. So they are growing nicely. They are profitable, very good. And they don't show funds from operations here. Here they is. They do. Sorry. So funds from operations is right here. And this is what is used to pay dividends. In real estate investment trust, there's some rules behind it, and they're paying out 62.84% of their funds from operations. That's pretty low ratio. I've seen some real estate investment trusts that are paying 75 or 80% of their funds from operations. These guys are very comfortably paying 62%. That looks really good. I think they can increase their dividend rate and really not have a problem doing so. Let's take a look at how many times they've increased their dividend. So their dividend has been growing over time, the amount, the dollars they pay. And it looks like they raised it for the first full quarter of 2024. And they'll probably raise it first full quarter of 2025. If the past kind of is a pattern of how they're going to do it, they'll probably raise it, 5 cents per share per quarter. So that'd be a total of 20-cent raise. That would make sense because they're making plenty of money. They have enough funds from operations with enough room in that funds from operations. So I think their dividend is going to continue to expand. So I'm liking what I'm seeing. The real estate space had a really good day because I think interest rates dropped to some extent. And of course, there was a big sell-off in technology as well as energy, with oil prices dropping so much. Energy stocks sold off, so that those investors were looking for a place and they settled in on real estate being one of the safe havens where they wanted to go. So I like this stock. I would just say trying to pick a good place to buy this stock would be a good idea. I'm not actively looking for a real estate investment trust. I already have one that I like, and I own real estate outright and I rent it out to people. So I'm not looking to get any more exposure to real estate, but somebody that is, I think this is a good stock to look at. I don't see any problems. I don't see any red flags. I see a pretty good company to consider. Of course, this isn't a financial advice. I'm just sharing my opinion about the company, and I hope you find it interesting. All right, looks like Brad's joined. How are you, Brad? I did the same with CCL. Nice one bagger. Congratulations. What's CCL? Let me take a look at that stock. Carnival. Yeah, that was a good move. And I think the cruise ship companies did a little better. If you saw the man, look at that chart. Before COVID, this was a $43 stock. Now it's trading at 21. But it was as low as $6. Wow. Yeah. You could really have doubled your money really quickly. Good move, because now the cruise lines are just full. They're selling so many. I don't know what I've never taken a cruise. I don't know if they sell tickets or I don't know what voyages. I'm not sure what they sell. On an airline, they sell tickets and you get a seat and you get to sit down and take a flight. But good move there. I think this was a really nice swing trade. Hold it for a period of time, make your money, and then get out. It's good to have that exit plan, especially around like the cruise ship industry, the airline industry. I would say, looking back at my United investment, I probably didn't think through that closely enough. I could have probably got out with maybe a 50% return, but I thought I would try to double my money, and it never happened. I probably stayed too long in that stock. So it looks like XKeo21. Thanks for joining. And you're an aeroholic. Not sure what that is, but let me keep going here. All right. So we went over United, looked at the Avalon Communities REIT. Now let me look at JB Hunt. I like looking at these logistics companies because to me, they tell me about the economy. If logistics companies are really, really busy, that means there's a lot of commerce happening. So let's see what caused this almost 7. So after hours, they're up almost 7% when they announced. So some of the headlines. So when did this get announced? This was 2 hours ago. Yeah, this wasn't after they announced, I don't think. So we'll have to take a look at the actual website. So this is JBHT. So JB Hunt, I believe they do logistics, big 18-wheeler tractor trailers moving cargo in bulk, either full truckloads or less than truckloads, and moving them around. So their quarterly results, let's take a look at that. And let's take a look at their full earnings. So for the third quarter, revenue was down 3%. Operating income was down 7%. Earnings per share was down 17%. So why is the stock rallying? Maybe it's that it's better than investors feared, might be the situation. And I'm reading through this, bear with me, trying to get the gist of how they did. So it looks like they operated, probably the story, investors were thinking that their business was going to slow down quite a bit. UPS earnings were disappointing. Their business has been getting smaller. FedEx, ditto. Their profitability is really waning. I think their expenses, their cost of doing what they do is gone up. So I think these guys were setting themselves up to probably follow suit, and they probably produced better financials than the market expected. You see the drop in revenue from the previous year, 3 months ended September 30th, to the current quarter that just ended in 2024. They did control their expenses. Expenses did go down. Very good job. That's good. Good discipline of getting their expenses down. And they were profitable. So good job. As we go out throughout the year, they are going to be down in revenue year to date as expected. And their expenses, again, they are trying to be disciplined, and their expenses are down from the previous year. Let's take a look at their cash flow. How did that look? Here they're, separating the different businesses and showing how they did. And here is, so cash flow from operations. Okay, cool. They gave us the 2 lines that I need. So cash from operations went up. Went down. Went down from 1.5 to 1.1. That was a pretty good drop of 350,000. Their net capital expenditures were substantially lower. So they actually produced good free cash flow year to date for the first 9 months. Their cash flow is in the neighborhood of 650,000. That's pretty good cash flow. If you annualize that figure, you're at about $1 billion in free cash flow for the company. Just using a simple way of valuing it, if I multiplied it times 10, I'd get to 10 billion. I'm not sure I would ever I'd get to 17 billion if the company isn't growing very well. If we look at their growth rate, they were growing nicely when we had supply chain issues in 2021, 2022, but they've been contracting for, call it a year and a half, going on 2 years. So they have trouble. When they normally grow, in normal times, they grow at 5%, 6%, which is expected. So this is an interesting company, but not an investment that I'm crazy about, really excited about. You can see for the 1 year, it's down 8%. Over the 5 year, it's up nicely, about 60%. And I think a lot to do with that is when we had supply chain issues, a lot of these logistics companies were making a lot of money, but those supply chain issues are behind us. Now supply chains are balanced. The demand meets supply. Not a lot of opportunity for JB Hunt to make that kind of profit they were making in 21 and 22. So this one's an interesting company to look at. I'm glad that the stock's moving for investors, but it's just not a stock that I'm really, really excited about. I was more excited about the shipping companies. I was in Zim, made some money, had my exit strategy, got out, made a good return very quickly, and I'm good. I'm not sure I want to get back into the shipping logistics business just yet. I think we're entering, especially the next 3 weeks, we're entering a zone of there's just going to be more and more tension, anxiety, and fear added to the market. We have this giant election coming at the beginning of November. We had a bad announcement from ASML that's really caused the market to really sell off today. And JB Hunt, I think it'll be a smaller logistics company. I've been looking at UPS and FedEx potentially to get into that company, or Union Pacific. I'd love to own a rail company, but they tend to really keep their value and they don't offer up many discounts. So I'm being patient trying to get into Union Pacific. So that's JB Hunt. Glad they're doing well in after hours. So speaking of Jeremy, hey, very good to see you from Toronto. Thanks for joining. I appreciate it. And thanks for the Warren Buffett quote. I guess I wasn't familiar with that one, but I'll have to look it up. I'll look it up after the stream. Okay, so that was JB Hunt. Let's talk about ASML. And this one here, what's interesting about this is a pre-announcement, right? They're supposed to announce tomorrow. And I guess the information was going to be quite shocking. This is what Intel should have done back when Intel had their earnings. And they should have pre-announced it a couple weeks prior. So ASML is looking at their numbers saying we should release it to the market so that way their market isn't completely going to lose their minds tomorrow on the 16th, although the market pretty much lost their mind anyway. They were like, oh my God. And I believe that their earnings were okay in quarter, but what they cited was, we're seeing a contraction in the business. So they did the revenue that they were expecting, but they were saying that, hey, bookings for future revenue are really low. And that's going to cause us to probably be in somewhat of a little recession within our semiconductor equipment micro industry. So when they said that, it means a lot of things. So first, obviously, ASML is probably going to have a couple of quarters, if not maybe a couple of years, of some leaner times, not as much revenue, not as much profit. It is an exceptional company. It's worth 339 billion. And is this in euro or in dollars? This is in dollars. So this is a really valuable company, and it's really important. And I believe they have really good barriers of entry into their market. They're I think they're the best, the biggest maker of these big machines to make semiconductor chips. And if you see these machines, they're pretty impressive, and they cost several $1,000,000 a piece. It's not like, hey, great, I'll order it on Amazon and have it delivered. Now, these things are big investments by the foundries, the makers of semiconductor chips. And ASML is clearly the leader. There's other competitors, but nobody owns the space like they do. They have the most market share. Their equipment is installed at TSM, Intel, wherever the big foundries are to make those computer chips. ASML equipment's there. So what it said is ASML, the business is going to have some lean times. Okay, clear. But it also says, well, it's somewhat of a contrary message to what I've been hearing about semiconductor, which is, hey, with AI exploding, AI is going to drive a lot of semiconductor capacity and volumes and sales. Makes sense. But we're not seeing that in ASML's numbers. ASML is not sitting there saying, we can't keep up with the demand. We can't get machines out fast enough because customers really want them. So it's a signal that potentially the AI hype is a little more hype than fact, potentially. What's going to be interesting is to combine this report. Again, they'll officially come out with their data tomorrow, with TSM, which announces on Thursday in 2 days. So following kind of like the semiconductor ecosystem or manufacturing chain or supply chain, the equipment and infrastructure to make semiconductors, that's ASML. And they grow when times are good and there's lots of demand for semiconductors. The semiconductor companies, the foundries especially, have lots of capital to invest, and they buy machines from ASML. And then the next kind of big player is the foundry. And TSM is a foundry that works with Broadcom, NVIDIA, and others who are fabless semiconductor companies. They don't have a foundry. They depend on TSM and other public foundries. And if we see that TSM comes out and has a weaker than expected earnings, then it's going to be sell off all over again. If they come in and as expected, the semiconductor space will stabilize, maybe even rally. But that's going to be our earnings that is going to be watched by many, many investors is TSM. We just saw ASML. This was a surprise. It caught everybody by surprise. And it is a fact. It's data that contradicts the big AI hype. So we will see how this plays out. It is so interesting to be an investor because you see information like this and you go, okay, how do I put this into context of the big picture? And for me, it's interesting. It's not enough to form a, hey, this is the conclusion. This is what I think is going to happen. This is just one variable. But again, I put this combined with TSM. We'll soon hear from Microsoft, which is one of the big public cloud infrastructure players. And if they're showing less capital investment in their cloud business, that's another sign that, hey, the demand for infrastructure related to AI is not as high as people are believing, or if anything, pricing into these stocks that are AI stocks. Flip side, if TSM comes out and has phenomenal numbers and Microsoft has phenomenal numbers and they say, man, we cannot spend enough capital to keep up with the demand for our infrastructure, then they're going to rally. And we'll see which way the market's going to go. We'll see which way the data lands. So it's going to be a really interesting couple of weeks. Earnings are always like this. So I enjoy these times because it's great to get these data points and really update and adjust my perception and observation of these industries and how I can invest and make money. All right, so that's ASML. Very interesting update from that big company. And let's move forward. Let me keep up with some comments here. So Brad, I bought more. Yep. So China stocks did, horribly today. So I bought more at JD, I bought more NetEase, Baidu, and I have this ETF that buys a pretty good selection of Chinese stocks. I still do believe in the Chinese trade overall, for the next 12 months. It might be the best trade that I have access to. The market in the US is expensive. I still own most of my stocks are US companies, and Meta being number one, Google Alphabet being number two. But those stocks are doing great. I'm not going to sell them, but it's just getting harder to find discounted stocks in the US. In China, the fundamentals look great. It's almost like the airline stocks have great fundamentals. That's China. They have great fundamentals. So if they start to work, I want to be a part of it. I didn't have a lot of exposure. I had Baba a month ago, maybe $38,000 of Baba. And now I'm trying to put, I don't know, $75,000 to $100,000 into Chinese stocks. So I have better exposure and a good part of my portfolio in the second biggest economy in the world that's growing more than 2 times faster than the US economy. So yeah, I did buy some stocks today. We'll see how they play out, and we'll see how it goes. So you're right about the ASML, not only the biggest and best, the only maker of lithography machines. I agree. Very good competitive barriers. Their competitors can't touch them. Yeah, connecting the AI dots. And Yang treated me well. Is that a stock symbol? Let me take a look. Oh, wow. So this is a China bear, and you triple your exposure to it. So China Bear 3 exchange traded fund that is based on. Cool. Well, I'm glad you made some money. And yeah, ETFs. I'm in one ETF. I'm not too crazy about the ones that are leveraged. Again, if you're right in the right direction, congratulations. Because today this one here went up 15%. That's phenomenal. Looking at the 5-year. Does this make any sense? That doesn't make a lot of sense. Yeah, these charts are hard to read. I would have thought that they would have done well with the big sell-off in China. It did lose a lot of money from a month ago to today, but then it rallied really nicely over the last 5 days, up 20% in the last 5 days. So yeah, China's an important trade. I think a lot of inflows are flowing into the China market. We'll see when it's going to decide to kick back in gear. So, all right, let's move on. It looks like new NYC Urbanista. Thanks for joining. Drug was phenomenal today. And then XKio 21 have TARS. Very cool. 2 really good ideas. Yeah, healthcare. United Healthcare had a terrible day, and so did Johnson & Johnson also had a bad day. So both of those healthcare companies had a bad day. The only company I can think of is Walgreens. They had a really good day. A lot of the healthcare providers and some of my small caps healthcare companies like Catalyst Pharma had a really good day, and so did United Therapeutics. Pfizer also went up nicely. Those 3 stocks for me did quite well. I'll go to Catalyst since it's a small cap, and it went up nicely. It's 2.5 billion. It's done well, and it's had moments where I could really buy into the stock. But overall, I'm really doing well with the stock. Really like their their lineup of pharmaceutical drugs, profitable, growing, all the things I want to see. Most definitely a stock that's going to double for me in the next 5 years, if not triple. And then my other really nice, smaller, this is more biotech, is United Therapeutics, 16 billion. And this stock has worked. It's worked for the last 12 months. I think it's going to be worth so much more in the future. They're doing some really exciting things. They continue to expand their revenue. They're profitable. They have patents on the drugs that they produce that have a lot of demand. And I think that's going to drive their valuation in the future. All right. So I got to take a look at drug because looks like 1,500. So, wow. That's insane. What happened? So what happened here? Did they have some kind of discovery? And they're still up 24%. So what is going on with this? Look at this chart. The chart is, I've never seen a chart like this. They were at $1 a share, and now they're at $38 price. Bright Minds Biosciences. What do? They went from, and they were a tiny valuation, right? So this is like super high risk. So they do Bright Minds Biosciences, a biotechnology company, develops therapeutics to improve the lives of patients with severe and life-altering diseases in the U.S. Okay. So did they have some huge news? Like, the FDA approved something that they're doing, or what was the news? Nothing. So what caused the big run up? Interesting. So they're participating in some scientific conference. So it's a pump and dump. They trapped a bunch of shorts. Wow. Well, not exactly the investing kind of journey that I'm on. I want to buy stocks, hold them, consistently make money year after year. And this one here certainly is a wild ride. Congratulations to anybody that owns it. If you bought $10,000 of it a month ago, you're sitting pretty. You multiplied your money times X. All right. So looks like some other people joined. Retired guy. How you doing, man? Yin is the opposite of yang. Not sure what that means, but it's probably very meaningful. Vertex. So I've heard of Vertex, and I think they've been around for a while. So Vertex Pharma, right? Yep. They're pretty good size, though. These guys, I have heard of them. They're doing well. 125 billion. 5-year chart looks great. I think that healthcare, especially pharma, of course, Eli Lilly's been a superstar stock, just phenomenal. Novartis is second place to that phenomenal rise. But I think there's a lot of value that's going to be really unleashed in 2025 within pharma. I think those stocks have kind of been neglected, and historically they come with great returns. So it's a really nice area, very, really good fertile ground to be looking for good value in pharmaceutical. Small, medium, large, there's value across the board. I've got a portfolio across small, medium, and large, and I'm really glad that I've set that up. It's been doing well for the last 12 months, but I think that may outperform technology for me in 2025. If China really begins to take off, that might outperform them all. But it's hard to imagine technologies can keep going on their run. But for all I know, they do. Then you just keep rocking. So we'll see how it goes. Omar, good to see you. Very good to join. Thanks. All right, so let's keep going on earnings. So we left off on Interactive Brokers is one that I wanted to look at, and I believe they announced after. Yeah, so they announced, and the market doesn't like it. Previously I had looked at Interactive Brokers, and they looked good. They had good revenue growth. Look at this revenue growth. Looks really good. So what did the market not like? Operating income looks good. Earnings per share. Look at the quarterly to get more exact. And I don't think they haven't loaded the quarterly yet. So let's take a look at the headlines then. So they did grow nicely. Their revenues are up. Revenues were 1.365 million. Net revenues, and I think that's a billion, right? 1.3 billion. And previous year they're at 1.145. So that looks like good growth. Now I didn't want to invest in Interactive Brokers. I just thought they were doing really well. Let me look at their stock chart. See how they're doing? Up 80%. It's been a really, really good stock. I guess they didn't meet the expectation. That's a pretty high expectation since their stock is up almost 80%. And I invested in Robinhood. I'm glad Robinhood's been great. And I don't want to own too many of the same thing. Interactive Brokers, Robinhood, very similar. But this one's just been doing great. And look at the 5-year, up 225%. So I tip my hat to Interactive Brokers. They're getting it done for investors. And the company operates with good revenue growth, profitability, free cash flows. All the boxes are checked in my valuation techniques with Interactive Brokers. Looks like their earnings were not good enough for the market. Is the market trading up or down? I don't know if there's going to be futures being published just yet. Probably not. This is probably too early to look at futures. But we'll see where this goes. This has been a very good winning stock. I'm gonna hang on to my Robinhood. I think Robinhood has a grander, more higher potential story long haul, because Robinhood is a new generation firm that's really breaking old molds and setting up kind of like their growth. Interactive Brokers is awesome, but they're kind of taking old recipes and doing them better. Can't fault them for it. They've been doing great, delivering great results for shareholders. I just think the Robinhood story is more special, more organic growth. They really are kind of disrupting the financial services markets in a big way. We can thank Robinhood for zero cost trades. They're doing crypto. They've been doing crypto for a while. They're doing banking now. They have their credit. I mean, they have product after product that really caters to the marketplace they're selling to. They're not trying to reinvent, let's say Charles Schwab. No, there's like, you know what? We're going to go down our own path. We're going to break things. We're going to disrupt things. And it's been working. And I really like that about them. They're also, Robinhood is a good growth company that is delivering very good free cash flow. And the stock's been doing great, like Interactive Brokers. So interesting to see this stock is down a bit. I think Charles Schwab announced, and Schwab earlier was trading up, and it still did. So these guys really crushed it. So why isn't Interactive Brokers being treated a little nicer? These guys are doing good, not as good as Interactive Brokers, but good, and not as good as Interactive Brokers. But these guys are much bigger. These guys are a good firm, but they really had a very good day on a down day. So that even means more. All right. So XKEO 21 sold out of Hood. Yeah. I sold out of Amazon and it just haunted me. So I've been getting back into Amazon. The market sold off Amazon and I've been just buying it as fast as I can to get back to a very big position of Amazon. I know how you feel. I know I know the regret. But that's why we play the game, is to make money and learn. And sometimes, some of our mistakes or regrets are really good motivators to, doing things a different way that's going to be more profitable, more lucrative. But I hope you get back into it or find something that's better. All right. So we went over Interactive Brokers. This company, these guys they announced today, and I have no idea what they do. Omnicom Group, together with its subsidiaries, offers advertising, marketing, corporate communication services. It provides a range of services in the areas of advertising, media, precision marketing. Okay. So they're that type of services. Wow, they're a huge company, 75,000 employees, founded in 1944. So this is like an old school company. $20 billion market cap, revenues 15 billion. PE is low, forward PE is low. They're doing really well for the 1 year. Look at this. I like companies like this because they sell off. If I believe in the company, it gives me an opportunity to buy shares along the way. But overall, it's gone up, and especially for the last year. So they announced, and their stock's down. So the market didn't really love what they had to report. So organic growth was there. This is kind of an old school company, and they may be plagued with, the new companies like we've been looking at AppLovin, and that's a really exciting company that's operating somewhat in their space. But AppLovin is totally new. It's like a disruptor stock. And I think they're going to be dealing with companies that want to do it a whole new way. These guys are kind of taking old techniques or old services and trying to make them more modern. And they may have a tough time keeping up with the new, really innovative companies. These guys here are growing 6.5%. They are profitable, good margins based on their headline. So revenue grew, net income looked good, EBITDA looks good, it grew, it expanded. That looks good. Just scanning to see if they have forward guidance, which it looks like they don't. So the font's really small. If I look at the statement of cash flows, I'll make it bigger. Nope, not lucky. Okay, so this one here, this is a marketing services. They help companies. They're kind of like the ad agency. They help companies spend their advertising dollars, which is interesting. They have a lot of employees for $20 billion of revenue. They have a lot of employees. That is incredible. And it's kind of concerning. Why do you need that many employees? That's a lot of cost. Where you have, like, I think it was AppLovin. These guys are 48 billion market cap, bigger market cap, and they have 1,700 employees. These guys are more technology based, and these guys have been really working. Boom, 273. This is a really exciting company, but it is a little overpriced. My friend Scott with Scott's Due Diligence did a really nice video on AppLovin. I think he released it today, and his conclusion was that it was overpriced. I come to the same conclusion. It's a great company, but even if it's a great company, overpaying for a stock is never a good idea for me. So this one here is probably not going to go up very high because it's being disrupted. This is the disruptor disrupting these kinds of companies, kind of doing it a new way and, taking over a particular market space. Okay, so we had Interactive Brokers. Walgreens announced they had a really good day. All right. So tomorrow we have ASML is going to give us the data behind their big release. Abbott Labs, which is a pharma company, is going to announce. And I've heard that there's an insulin shortage, like the bags of insulin that you find in hospitals. There's a shortage of it. I'm not quite sure what caused it, but that shortage may be helping companies like Abbott Labs, which is a big producer of that product. Number one is Baxter. Number two is Abbott. Morgan Stanley Financial Services is going to announce before the market, and then Prologis, and then US Bancorp. These are going to be significant. I've been a US Bancorp stockholder, and I reviewed this in the morning, kind of looked at it. We'll see how those go. No bigger names in the afternoon. Some pretty good names. Kinder Morgan, CXX, a rail company. That'll be interesting to look at. All right. So, hey, Tomas, good to see you. Good afternoon. And looks like I'm all caught up on comments. Thanks for joining. Is there any like hot topics or hot stocks you want me to look at before we conclude? I probably got another 5-10 minutes to go. In the meantime, just to remind you, you can join me and many others on Discord. We communicate pretty much, speaking for myself, 12 to 14 hours a day. Not full time, but I respond to things as early as, 7 in the morning Eastern to maybe 8 p.m. Eastern. But there's a lot of investors there, and it's pretty darn valuable. So I would get involved in that. And you're probably seeing me on YouTube, and some people see me on Twitch. I'm new to Twitch, so just a few people are there. You can follow me on Threads or Facebook if you'd like. And if you would like to be a part of the community as a paid member, you get these perks, principally just greater access to the community. I'm going to have the first workshop session this Saturday, and I'm going to put together the time and the invite, and I'll invite members, and we're going to get together. We've been doing calls on Sundays, and it's more of an investor call. We talk about topics and go over them. They've been going really well, but the request came in that, hey, can we just really get into financials, really dissect the financials? And it's more of maybe one or two of the people that are in attendance can kind of share their screen, and we can kind of go through. That way, those individuals can maybe improve their skill set around looking at financials and or looking at the valuation model that, I've provided my valuation model. You can use that, or you can use your own. We can go through the logic of looking at a company and valuing it. So we're going to do that workshop on Saturday. If you wanted to be a part of that, if you're an advanced investor, you'd be a part of that. All previous people that signed up early that were value investors, you automatically get upgraded to advanced investors. So advanced investors, you'll all be invited to the workshop. But going forward, if you'd like to be a part of the workshop, take this level. Please do it before Saturday. I can invite you to the first session. And then I plan to have that session on Saturdays, and then the investor conference call on Sundays. All right. So let's look at DSP and Falls Grave. Good to see you, man. I'm going to get to your comment in a minute. So let's take a look here. So DESP. Despegar. If I'm pronouncing it correctly. So this is a small cap, just a little under $1 billion. Despegar is an online travel company, provides a range of travel and travel-related products to leisure and corporate travelers through its websites and mobile applications in Latin America and the United States. It operates 3 segments: air, packages, hotels, and other products. 4,500 employees. They're somewhat new. They started in 2017, so that makes them 7 years old from their IPO. So they're probably more like 10 years old, maybe a little older. Let's take a look at their website to see how cool it looks. Looks good. It looks like it's very Latin America, Spanish oriented. Awesome. And travel down to, speaking from Mexico, traveling down to Mexico, I've really enjoyed. Really great experiences. And I got to keep going south. I want to go down to Colombia, Brazil, Argentina, Chile. Of course, I want to go to Peru, go to Machu Picchu. So I've got a lot of places that I want to check out. So this site is predominantly, I'm thinking, focused on the Hispanic traveler that's probably booking their travel. And there's a lot of Spanish speakers in the US, in obviously Mexico, and all the Spanish speaking countries. So this is a big marketplace for them. So that looks interesting. I get their business. And looking at their valuation is under $1 billion. Revenue is $740 million. They are USD. Okay, good. Forward P is 12.4. Okay. Strong buy, 22% discount. For the last year, they're up 92%. Wow. It's been a wild ride. So they've gone, understandably, during COVID, right? If you were in travel after COVID, you just got murdered. Your stock went, there was nobody traveling. But then they came back. And then what happened here? Why did the stock sell off? But it's really picked up nicely from there. All right. Revenue-wise, they were just screaming growth in 21, 22, 23. The numbers keep getting bigger. So it's harder to grow at the same rate when your number is bigger, right? So that's understandable. Looking at the quarterly, revenue continues to slow down, 11.79. Now, the economy looks good for the consumer in 2025. And I'm going to see if these guys are profitable and if they generate free cash flow. But I expect that these guys will probably continue to grow at these rates and maybe become an acquisition target. Because if they really get the Spanish-speaking market, and there's a lot of destinations in Central and South America that a lot of people want to get to. So this might be interesting. So let's keep rolling here. So this is a tiny company. The revenue looks good. Good growth. Let's look at the balance sheet. Make sure that these guys are well capitalized. They have plenty of cash, not too much debt. So they do have more cash than debt. So they have net cash of 121 million. No debt problem. Very good. Now let's look at their statement of cash flows. They're expecting to be profitable next year. This year, they're not going to be profitable, but it doesn't mean that they have to be cash negative. In their case, they are. No, I take that back. I was reading the wrong line. So cash from operations is already positive. This looks really good. That's why the stock's been working. I had never heard of this company, but like Uber, I started buying into Uber when I got to like this point where they were still negative cash. And then once they clicked over to positive cash, boom, the stock really started to work. It looks like this stock is already working, but it's so darn tiny that they can double in value and they still don't catch a lot of attention. So we'll see. So these guys are 78.8 million in cash from operations minus CapEx. So you're at 68 million in free cash flow. Now that's going to grow. It's going to grow because as they get bigger and they get more established and they have everything set up that they need to set up, they don't have to invest a whole lot more into the business. It's just going to get more into a cash generation phase. So I would say that this business is worth like 2 billion potentially. If I multiply 70 times 30, that would be about 2.1 billion. And this is a $1 billion market cap company. So this is an interesting stock. This looks like it has some really good characteristics to it. Um, I like their regional play. Like when you look at like booking's really good in the US, booking's really good in Europe. Airbnb, phenomenal in the US, growing in Europe, growing in Latin America, growing in Asia. But I'm willing to bet that these guys probably know Latin America better than the other companies I just mentioned. They can probably cater to their customer better, offer up better packages that make sense. This would be a stock that I think buying it at the right time, at the right price level, and then probably wanting to get out of it at a certain point, because I don't think they have a technology. It's not like Airbnb where they really did break the mold. It's just So they don't have like a technology platform that's very unique. Their platform is a lot like, Expedia, but they just cater to the right market, a market that's growing, a lot of people wanting to travel. And but I'd probably want to pick a point where, hey, I go up 50%, I go up 75%, and then I'm out. That's what I'd probably want to do with the stock. It's really offered up. I mean, geez, it's offered off great acquisition prices. It's shown volatility. The fundamentals looks really good. Let's say we have a pretty good sell off over the next 3 weeks with the election and all this fear coming, this would be a good one to kind of keep an eye on and put a few dollars out there. But I would probably want to have, an exit plan when I bought this stock, own it for a while, and then sell it. Not be a long-term hold, like let's say an Uber, where I don't imagine I'll ever sell it. I just wanted to keep compounding. They have a game-changing, and it looks like I am not sharing the right screen. That was dumb. So DSP, and sorry that I wasn't sharing my screen. So this stock, it's had really good acquisition prices, and really the fundamentals look good for DSP. Just to kind of do a recap, growth is there. The balance sheet, they have more cash than debt. Cash flow, they're beginning to cash flow. Just back of the napkin, I value the company at like $2 billion because their cash flow is going to really expand very fast. And they're already at like a 70 million clip or run rate for their free cash flow. If you look at the trailing 12 months, multiply that times 30, since it's a high growth company, I get to like 2 billion. And I think the company is an interesting one to track. They've shown volatility. If the stock were to sell off, this would probably be a stock that I'd entertain buying, but only buy it for a short period of time, maybe a year, maybe 2 years, and have an exit plan. Like, hey, maybe at 30%, 50%, I sell and kind of get out of the position, take a win, and move on. Because I don't think that they have a platform that's really going to keep away competitors. It's going to be probably a good little company. Maybe they get acquired, but I don't see a big technology platform. So that is DSP. And sorry that I wasn't sharing my screen on that one, Tomas. All right. So Fallsgrave, I did talk about China stocks a little bit. And just to recap, some of the comments that I've read on their stimulus. So on Saturday, they worked on Saturday. The government worked on Saturday because they had like a 7-day holiday. So they said, hey, we're going to come back from holiday and we're going to work on Saturday. And they committed to stimulating the economy. And they really are trying to get the real estate market stabilized because it's been dropping really fast. So they committed to that. They committed to adding more liquidity through the banks. So that provides, just more access to capital for businesses. And they're looking at stimulating to get people to spend money. One of the things that China's really good at is saving money, both their citizens save a lot of money and the government buys a lot of US bonds. Well, that's good for the individual, but bad for the economy. In the US, we like spending money. So they want their citizens to spend money. And they don't have any exact details yet on how they're going to get citizens to spend money. And the press was disappointed about that. So they did put out some negative stories. In general, I think it's good that they're going to stimulate the economy. And what I look at with China stocks is their economy is massive. It's the second biggest economy in the world, and it's growing at 5%. It's supposed to be bigger than the US economy by the year 2030. That's like 5 years away. In 5 years, they're going to be a bigger economy than ours. Needless to say, that big economy is creating a bigger middle class. It's, putting a lot of discretionary dollars in those consumers. So I want to be a part of it. And it's not going to be a major part of my portfolio. At this point, it's probably 1 to 2% of my portfolio. If I can make it 5% of my portfolio, I'd be happy. And I've got a ways to go. So the stimulus is out there. Hopefully China begins to work. They don't have an election going on, so there shouldn't be a whole lot of tension about China stocks. And either candidate for president hasn't really been kicking, the China name around and saying that they're really going to be tough on China. They've been talking about other stuff, so we'll see how that sorts itself out. So that's what I've got to say about China. I'll continue to follow this China trade. It is what I think is potentially the best trade for 2025. And I've put out videos on my channel if you want to watch those as well. So that's my comments on China. So Dieter, good for you to join. Thanks for joining. It looks like Omar, you've been holding Upstart. Congratulations. That's really been moving. Congrats. All right, guys. So I'm going to shut it down and wish you guys a really good evening. I hope that you guys are hanging on to these profits we've made in 2024. I'm a long-term investor. I like making money each year, being smart about what's going to work next year and maybe in 2026. And we just had one bad day. I can't say that it's the beginning of something that's going to be more significant. I would say that I wouldn't be surprised if we stay in this bear market zone, because we have the election coming. It's going to be a little tough to get a lot of enthusiasm with a lot of fear in the market. It looks like Michael Anthony has a question about what times I start. Each morning, trading morning, I do live stream at 9:30 Eastern. And then Tuesdays, Wednesdays, Thursdays, I'm trying to live stream at 5:30 p.m. Eastern. So those are the times that I stream. And I have tried to put that on my community page. And I put it on my Twitch schedule, which they do have a streaming schedule there. So hopefully I get to see you around, Michael and everybody else. Thank you so much for joining. I appreciate it. And I hope to see you tomorrow. And good luck. Let's see if the market will go up tomorrow and see how we can make some money. Everybody have a good night.